Just as a brief overview, as you know, our money is invested in equities. We believe this is the superior asset class. And despite the volatility that comes by investing in stocks, we're very confident that in the long run, that your businesses that you own will be significantly higher and worth more than at present. And I said I wasn't going to share a slide, but I actually think this will be somewhat instructive. This is the very end of the presentation. And can you see that?
Yeah.
So this is the very end of the presentation. And basically, in a nutshell, our strategy is focused around investing in global champions. And what we mean by global champions are businesses that have enduring pricing power, that have long-term volume growth opportunities, that where there's also an emphasis in protecting your shareholder interests. You are a shareholder. You own stock in these global champions. And for that to happen, they need to have ownership-minded management teams and have very strong capital structures so that we avoid bankruptcies, things like that. And then we're focused on not overpaying for those high-quality businesses. So we're looking for market timing, mispricings, high-quality businesses, and looking for the highest forward-looking risk-adjusted returns. And then a big part of it is being patient and waiting and allowing that discipline, that strategy to do its thing. So I wanted to share that brief slide from that standpoint. Brian, do you have anything you'd want to add before we begin, or as we begin here?
Well, I guess I just want to come back to emphasize that point about pricing power. I think when I say this, it's going to sound so obvious that you make money by compounding at a high rate of return for a long period of time. And that makes sense to everybody. But I think what's tricky about that is that if you own a business that's making a very high return on its capital, then entrants are going to come in. They're going to want to make lucrative profits as well. And so capitalism works. They step in, and then all these people come in competing against each other, trying to make something better, faster, cheaper. And what that does then is, in order for people to keep getting volume, they have to bring down their prices so that people will come to them. And that drives the prices down right to the cost of capital. And so what we're really looking for are those extremely rare, unique businesses that are special in some way, because despite suppose you have an identical competitor come along that offers nearly a virtually identical product or service, that you are able to still charge a premium and people still choose you. And that's extremely rare, but that's basically what we're looking for. And so we call them global champions because they're the champions found around the globe that are somehow able to command premium pricing because of something unique. And that usually tends to be connected to network effects of some sort. But, it seems like sometimes people will, when I say that you want to compound at a high rate of return, I think what's interesting to me is that when you think of all the investments that are out there, I don't think a lot of people actually think in those terms. It seems so obvious that if you make $1 by investing 100, you'd rather own the business that makes $30 by investing 100. And yet in the stock market, people don't really look at that. They'll just leverage up the one that makes $1 out of 100 to make it look like the one that makes 30. Whereas what we're trying to do is identify those companies that, hands down, without any leverage, they're just extremely profitable and they can remain making those high returns on capital for a very long period of time. So I spoke too long, but that's I just want to make sure we're really driving home that is what we're after. So Elliot, do you have anything to add?
Yeah, I just want to add, periods like we're experiencing now with sort of a lot of downside volatility are really painful. But I think the key to remember is that, that this is just what happens, and what you have to, this is the fee that you pay in order to participate in the long-term global, growth of global wealth. And so, you could go to something like cash and experience no volatility, but you're basically, guaranteeing that you're going to lose purchasing power over time. And so I would just kind of try to, in these time periods, I kind of just try to zoom out and just think about, are my businesses making a lot more money today than they were 10 years ago? And do I think that they're going to make a lot more money 10 years from now? And, if that's the case, then there will be lots of wiggles around the way, up and down. But over the long term, eventually the stock price will follow that earnings growth.
Well, let me go ahead and maybe just show that L'Oreal slide, since Elliot made that comment.
Sure.
I don't know if that's easy to come by, but we put together just a simple slide that was showing, there you go. So this shows you L'Oreal's annual revenues over the decades. And so you think about it, when you really step back and see this, I think it just brings some peace of mind. 1971, that was about €250 million. 1980, they were making 1.3 billion. 1989, 3.7. By 2000, a decade later, 12.7. 2010, they're making 19.5 billion. By 2020, 28 billion. And just last year, the trailing 12 months, they've made about 32 billion. I think the point is, you look at this, in the middle of all of that, I guarantee you that there was stress and anxiety over what's going on in the markets. In the 70s, there was all that stagflation. In the 80s, you had hyperinflation, or at least very, very high inflation. And then by 1987, you had that big Black Monday crash where the market dropped over 20% in a day. You have in the 1990s, there's the big crises, the Asian currency crises, and the Russian currency as well, and the blow up of the long-term capital management. In 2000, things peaked out, and then all of a sudden, all the bubble burst. You've got the Great Depression, the Great Recession, Freudian slip there, during the housing bubble crash, and we've had COVID. There's been all of these things that along the way, there's always reasons to worry or be scared. And I guess the point is that, but amidst all of that, the question is, do we own a collection of businesses that as a group, as a whole, will behave like this, where their earning power, they're adding value to the world in goods or services that will mean that they will be materially larger 10 years hence? And as long as the portfolio as a whole, if we're selecting these global champions, we believe they'll kind of act as toll takers on the rise in global wealth, almost like a royalty on the rise in global wealth. And we get to, what a cool thing that we get to participate as owners of these amazing, spectacular businesses.
All the stocks we've mentioned should not be considered a recommendation to buy or sell the stock. Consult your financial advisor for your specific situation. You can also request from YCG a list of all the securities that we've recommended over the last 12 months. Thanks for watching. Check out our other videos and we'll see you next time.